Kevin Hincks, live at the CBOE pre-bill playbook, joining us, and we think about what's been going on. Most of these economic prints have been looking pretty favorable lately. Some of your thoughts this morning. Good morning, Kevin.
Good morning, Nicole. Yeah, despite the markets being down, it's not because of the economic data, Nicole. All came in better than expected. From GDP, which came in at 3.8%, the last revision for second quarter GDP, now 3.8%. Personal consumption expenditures, which were 1.6, revised in the third look up to 2.5%. So big, strong numbers. Durable goods, they were looking for a number for down 0.5, comes in up 2.9%. The ex-transportation, looking for down 0.2, comes in up 0.4. Core capital goods, also up 0.6. So strong numbers out of the two main data points we get today. Then jobless claims. Remember, we were worried about jobless claims ticking up to 237, then the number north of 260, now 218,000, right back the last 2 weeks. The trend is now favorable for the job market. And here's an interesting point. Pouring over the tables in GDP, these numbers are getting better despite lower numbers from the government. Here, real final sales to private domestic purchasers, all up across the board, but 3.2% decrease in real value from government, Nicole. And then the next one, real gross output, up 1.2%, despite a 0.7 decrease from government. So everything's happening with this economy, yet the government is getting smaller during this period. It's quite incredible to think about.
I mean, that's what they were talking about overall, that this is a different sort of situation here where things are changing and evolving. I mean, whether it's investment in AI or less spending by the government, so that you can't compare it historically. It is a bit different. And while there were some more doom and gloom outlook, some have been more positive, and we're seeing the more positive coming to light here. We also have some Fed speakers. We heard from Jay Powell earlier in this week. What are we watching here?
We've got a lot of Fed speakers today, some that have already spoken during the week and are speaking again, like Austin Goolsbee, Michelle Bowman, Jeffrey Schmidt, he's the new Kansas City Fed president, John Williams, Michelle Barr, Lori Logan. Mary Daly has already come out this morning and made comments. She sees more rate cuts. What's incredible to me this week, Nicole, is the width, how wide the views are on the overall economy and where interest rates should be. Stephen Myron coming out this morning already talking about making his case for why the Fed funds rate should be points lower than it is right now. And leaving them as restrictive as they are has risk to the overall economy going forward. So we're going to hear a lot of commentary from Fed speakers as we have this week. We'll hear more today, Nicole. It's going to be pretty incredible. A lot to figure out. But that being said, why is the market down lower with such great economic data? If you ask my opinion, it's the fairly highly valued comments from Jerome Powell on Tuesday that kind of have the market on its heels a bit, I think.
Yeah, maybe also just some plain old profit taking. You think that's possible? Yeah. I mean, definitely I think that was a turning point in the market. I mean, he said that, and the markets turned and began to sell off. But also there may just be some simple profit taking here too. All right, Kevin, we're going to continue our conversations throughout this week. Love having you there at the CBOE, giving us all the updates.